Went to a waterfall.
Cole something. He's a very famous Texan, McConaughey or something like
Recording
that.
in progress.
McConaughey, probably.
Matthew McConaughey, yeah.
Matthew McConaughey. Yes.
Yeah.
Very good movie.
Good. Well, I'll check it out. All right, everybody, welcome to Snipers. It's the top of the hour. The market's open in 30 minutes. Stock, crypto, and options trading has large potential rewards, but also large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose. This is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. Okay, let's take a look at the markets. It's the same thing all over again, everybody. The sky is falling. The sky is falling. I'm going to check the news here, just go through a few sites. But more and more, the world is succumbing. The markets are succumbing to what appears to be an inevitability of a recession. And so this provides us amazing opportunities. And they're going to start this morning on Ford. Ford was downgraded to a sell recommendation. Advanced Micro Devices last week said their earnings are going to be crappy. So they lowered their guidance. We got Biden that's putting more screws to Chinese tech stocks, tech companies. So lots and lots of doom and gloom, but for us, it's rainbows and sunshines if you know how to trade credit spreads. So we're going to get into the actual heart of the system once again. I'll show you these slides. But Snipers came about via this. We're looking for the ability to snipe, to shoot from a far distance, a relatively safe distance, nice little short-term profits. Snipe them, sniper. Imagine a sniper, a mile away taking shots. So the high probability profit system is looking for big move stocks that have, either tanked or risen on either good or bad news. And then we sell a credit spread at support. If it's good news, resistance, bad news. Ford has some very bad news, a sell recommendation, very rare, especially on companies the size of Ford. And then we use 17 to 14-day options. So that's sniping, that's credit spreads. That's where we're going to put most of our attention this morning. So let's go just take a quick look at what's up in the overall market. There's a lot of places you can go to find news. I use CNBC and Bloomberg. CNBC has got a little bit of a nicer, less intense platform to show the news. I look at both though. They're both great. So just basically the news, stock futures are flat. They were down earlier. Looks like they're flat at the moment with key inflation data coming out this week and earnings ahead. And this is really key. And those of you that are in the earnings mastery groups, early indications point to a very disappointing earnings reporting season. Guess what we can do with those? With that, and I mentioned this last week on the earnings call, the earnings very likely will be disappointing on many stocks, and that could very well lead to big gaps. So on today's earnings call, we're going to be focusing on breakout straddles. So that call is at 3 p.m. Eastern Standard Time today. So we're going to be running the scanners and looking for the very best potential gapping stocks that are coming up. Now, we are in the heart of earnings season. There's a lot of companies announcing this week. It gets more, there'll be more and more next week, and the earnings will spill into the bulk of November. So we are in prime time earnings season as I speak. Okay, Chinese chip stocks tumble after U.S. calls for new curbs on high-end tech. Bloomberg says it a little more directly. No possibility of reconciliation as U.S. slams China chips. We've already done it. He's already done that. Biden has. And now what they're doing is they are going to require that any chip company doing business in China has to get a license to do so first. And any company that's using U.S. tools to build semis for China also has to get a license. So more and more just putting the crimps on Chinese semiconductor sales. And for all those reasons, this is a very good place to snipe. We want to look at chip stocks. We've already done that. We've looked at, we had a trade. We've got Texas Instruments on the board right now. We did Qualcomm a couple of weeks ago. That was a 7-day trade. And I'm going to be looking again today. Why not do it again? We did it 2 weeks ago. Let's keep on keeping on. So these are the things that, you want to, keep an eye on. Economic reports for this week, the CPI, Consumer Price Index. This is what it costs us. This is the consumer inflationary indicator. And it's expected, the CPI is expected to be 0.3%. And last month it was 0.1%. So this is going to be a key number. Now, what the market's going to be looking for is a contraction, that it gets better. If it gets worse or stays the same, it means that all these interest rate hikes still haven't taken hold yet. The other thing that's going on, and I put this in the WhatsApp feed last week, is that the job market is still strong despite an inflationary environment. So what does that mean? It means consumers are still spending. And so, that's what, unfortunately, we have to go through a contraction, and the joblessness has to increase for before inflation gets better. And so it's more of an indication, because the job market is relatively strong, that inflation is not abating, because a symptom of inflation is increased joblessness. That hasn't happened. So all of this is just, it's creating this crucible, and the Fed meets first Tuesday and Wednesday of November, which is 3 weeks away. More and more, 75 basis points, maybe 100 basis points if this stuff doesn't cool off. We also have retail sales on Friday. If we see a contraction there, that could, sales are dropping. That could be a sign that inflation is starting to take hold, is starting to abate. So anyway, the point is that when these reports come out, if they're favorable or considered less negative than expected, you could see a pop up in the markets and vice versa. So that's the deal. Let's take a look at the futures. Let me give you the chart real quick here. If anybody has any questions or comments, please raise your hand or unmute yourself and speak. Feel free to speak on these calls. So we're going to take a look at the markets, go through most of these here.
Speaking of spending money, I noticed that even in the duty-free shops, there was no any customers where normally would be plenty.
Yeah.
So yeah, people spend less money, I think.
Oh. You're muted, Mike.
We can't hear you.
There we go. It's back now.
I think we lost them for a little
Okay.
bit.
Let's start with the S&P. You got me back here.
Yep.
Yeah, you're back.
Sorry about that. It's my intranet. I'm back now. Okay, good.
Yeah, you're
Sorry
going in
about
now.
that. What's the last?
Mike, you're in and out.
I'm just resetting my internet. I'll be right back. Yeah, I'm just going hard right now. You back? Hello?
Frozen.
Okay. Just waiting for the internet to come here. One
Now
sec.
you're back. Maybe not. I thought you were.
All right. Do you have me back now?
And we
Yes,
can hear
sir.
you.
Okay.
Yes.
All right. Great. Great. Now let me get my Thinkorswim reconnected.
Still going in and out.
keep myself online, including 2 internet lines. Okay. You guys can hear me?
Yes.
Okay, awesome. All right, let's go look at the futures. I was looking for risk off this morning. I didn't see any. In fact, gold is down with a continue. All right, while I'm doing that, let me hop in here.
It might be something at Thinkorswim. I was getting that same error message when I tried to get into it.
Okay. All right, well, let's take a quick look at gold as of Friday while I'm waiting for the Thinkorswim to come back up. You know, we had some risk off here, and we had some risk off here. So that was that was Friday. So we had a couple of days of what looked like risk off. US dollar has gotten stronger, and gold is back down now. So gold, the inverse correlation between gold and the US dollar is now intact. And obviously gold dropping is a clear sign of not risk off. But we're going to keep an eye there over the coming weeks. That's a good place to keep an eye on evidence of risk off. All right, let's go to the futures here. And here's the S&P 500, the E-minis future symbol. So we got all this bearishness here that happened Thursday and Friday of last week. We hit our 3,800 in the thread as it broke below 3,750. I said expect 3,700, and next stopping point 3,600. This is on the S&P. This is the actual price of the S&P 500. And today, pre-market futures were down, and now they're up a little bit. So let me show you something If you want, you know, it's oftentimes on charts, you can look at minute bars, 5-minute bars, 30-minute bars, 1-day bars, 2-day bars, 1-month bars, 1-week bars. You can zoom in and out on time frames. And one thing I was looking at that I think is kind of interesting is if I go to a monthly chart, if Thinkorswim will cooperate with me here. If I go to a monthly chart, you can see really some for the entire year. Can you guys hear me?
Yes.
Okay.
Yes. Yeah.
So now I'm having trouble with Thinkorswim. Okay. Anyway, if you look at a monthly chart in Thinkorswim, you can come up here and you can set any kind of time frame you want, intraday, daily, custom, and I've set up quite a few here, and one of them is a max chart monthly, and that chart allows you to see every bar is 1 month, and so you can zoom out and look over decades and see if there's a longer term pattern, and there is. You'll see dramatic sell-off in this year if you look for on a monthly chart. Now this is not working right now. Thinkorswim is having some trouble. So here's what I'm going to do. I'm going to pause the market analysis for a sec, and let's take a look at our portfolio. Now this is as of Friday, where the data doesn't update until 10 a.m. today. And if you look across the board, we're doing well, except on one position. And this is a long-term bear call spread on Chevron. And if I pull up, when you run the performance report, trades, portfolio performance, and I've got a folder for Snipers Live, and these are all the trades. Some of them are closed, and some of them are open. This one happens to be open on Chevron. If we take a look at it, okay, what do we do? What do we do? What do we do? What do we do? We follow our rules. So, you know, there's some adjustments we can do that I've talked about, but even just keeping it simple, the rule is on these is if the stock closes above the break even, then you exit. Okay. So some of you haven't taken hedge fund. In hedge fund, we hedge these with broken wing butterflies. We started with a wider spread. So one adjustment you could do later is if the break even gets breached, you can contract the spread to squeeze some of this risk out and then convert it into a butterfly. I've done that on Walmart and it's working well. So we could talk about that maybe next week. I don't think there's anything to do at the moment. So on this strategy, if you were to back test 100 trades, you'd probably find that your win rate is in the mid 80s and your average profit per trade about 11%. And that's following the basic rules of exiting if the stock closes above the break even. All right. So that is sort of going to be the baseline. And I'd say just follow the rules on this one. And as we go forward, if the stock does get close to this break even, then I'm going to go ahead and I'll practice some of these adjustments. Notice that I do have a 10-point spread here, and that's to set myself up for dropping the 180 down to 175, squeeze the bellows, blow some of this risk out up here. A good bit of it, like a third, about a third, maybe up to 40% of the risk can be squeezed out if the stock breaches that break even. Now, what's going to stop it from getting there? Well, 165 is a resistance level. If I pull up a stock chart and we look at Chevron, of course, the reason Chevron's rising is because oil's rising. Now, when we got in, Chevron was down here. And then in this particular case, the stock shot up. OPEC's doing what OPEC's doing, contracting supply and raising the price of oil. So oil companies are benefiting from that. And then we have recessionary pressures. If people, if we move into a recession, people will spend less money on oil. They'll buy less gas, and that will abate any kind of rush. So we've got a lot of things working for us. 165, right about here, 164 and 166. Let's call it 165. No closes above 165 in this time frame. That level is in our near future. If we breach that, we might start thinking about adjusting the trade. Otherwise, take your eyes off it and move on to something else. Don't get fixated. Don't get attached. Don't get afraid. Don't worry. Detach, react. Detach, react. Detach, react. Just like you are when you're doing a back test. One of the things that you got to figure out a way to master, and this is what I'm helping you with, is you want to do precisely and act in the same fashion you did in your back testing in a live environment when real money's at stake. There's a psychological shift that happens for most every human being is the minute they lose on a trade, all the hours of back testing work go out the window and they start panicking. Oh my God, I need to adjust. Let go, detach, react, follow the rules. Let the rules produce the results. Let's make it impersonal. It's not you even doing it. It's the rules doing it. Let the rules rule the day. Rules rule. Detach, react. Detach, react. So we're going to let that one go. Now we've done well everywhere else. We've got a long-term bear call on KRE, which is the financial sector ETF. We've got a long-term bear call spread on IWM. Looks like that one's going to pay off for us. I mean, come on. You think the Russell's going to hit an all-time high or a multi-month high in this environment? And we're getting pretty close to taking this off. You can see here, we sold this spread for 43 cents times 100 is $43. We sold it for 43 cents. And currently it's worth 34 cents. So we've captured 13%. The max profit in the trade is 16.73. Detach, react. The rule here is buy the spread back for 4 cents, 10% of what you initially sold it for. And if I look here, just briefly, a simple way to figure out the approximate mid price is to consider just the ask prices. So 28, 20, 20 cents on the ask price for the long, 28 cents ask price for the short. You buy the short back for 28, you sell the long for 20. So your approximate mid price here is 8 cents. We're 4 cents away from taking this off with 42 days left in the trade. All right. Now it's really important. Don't, I mean, imagine that you'd locked up 500 bucks so you can make another $9. So you're locking up all that money, waiting for the spread to perhaps expire worthless. And while you're doing that, your hold time goes to, close to 90 days. Buy them back. Take that, spend 4 cents, free up your 514 and go put it to work in a better place. It doesn't make sense to hold 514 as in margin while you're waiting, in this case, for 4 cents. Why? It makes 8 cents. It makes no sense. It makes no sense. Free that up and go get another one. So that one is looking good. We had an Oxy bear call. This was an oil trade that we did. And this was a 1 week trade. That was a winner. And we also have this one's closed too. This is Qualcomm. No, it's not closed. Sorry. This is a long-term bear call spread. Similar story. We've captured 12% of our 15%. The mid-price approximate is what, 28 cents. You want to buy this back for 13 cents. I have GTC orders in already to accommodate that. So this one is looking real nice. Where do you think Qualcomm, a chip maker, is going next? It's quite conceivable that we'll be out of this trade in a few days. If Qualcomm breaks down to 113 where it just was, we'll be out of this trade in just a handful of days. All right, now we put a Zoom trade on last week. That trade expired worthless. This was an iron condor, and this is where it expired, right there. All right, so this thing expired worthless. We ended up with making 12% we put it in on Monday, and we grabbed our profit on Friday. We netted 12.36% if you let it expire within a week. So those are the kind of things we can do with these credit spreads. And I think that's all I want to show there. We're doing well. This trade will ultimately be a winner, I think, but if it isn't, we'll just manage it. Detach, react, detach, react. Let's take a look at the markets if Thinkorswim is back. Here's the monthly chart I wanted to show you. Okay, so I started trading right about here. This is my trading life right here. This is what I've experienced. The 2000 crash, tech crash, real estate crash, financial crisis crash. And then we had this mother of all bullish markets. We rose. This is a monthly chart. Once again, I went, I've got this set at a max chart. So all the days available and every bar is a month. So we had a few corrections here and there. Here's COVID, very short crash. So from here to here, so that was March of 2009, right after the financial crisis, all the way up to January of this year. That was the longest and most prolonged and largest bullish run in the history of the stock market. Typically, bullish runs last six to 7 years. And this was this is about a 10-year run. Just an amazing run. COVID came in, then the Fed came in and started doing quantitative easing, drove the market up to another massive run up. And this is what I wanted to show you. Look, this is the year. This is the year. All right. So this trend is distinct. It's likely to continue. Where does it go? Nobody knows for sure, but the best way to figure it out, let's pull up the E-minis again, is to look at prior support, prior resistance. Actually, let me go to a 3-year 1-day chart. All right, so we're at this point now where we're wrestling with 3,700, 3,600 looks like it's going to get breached at some stage here, which corresponds to this high back here in 2020, September 2020. The next level would be this level here. This was pre-COVID. So we're almost back to where we were before COVID started. And that level is 3,400. These are round numbers. You're going to see here's the next stopping point. Resistance, support. Guess what? That number is roughly 3,200. So these round numbers are where we're going next. I don't see anything stopping this train. I think we're going to keep on going, and that's good for us especially in the world of bearish credit spreads. Any strategy that profits on a bearish market, and there are many, is a really good strategy right now. Let's take a look at some of the other stuff here. All the other markets. Here's the Dow /YM. Same story, different index. Here's the NASDAQ. Very tech laden, and NASDAQ's probably going to suffer more than perhaps, at least in the short term, with these China sanctions going on. We'll see more bearishness in the NASDAQ perhaps than the other indices. Let's see, I've got the Dow, the NASDAQ, Russell 2000 /RTY. I don't have that on my list. There we go. These are the small cap stocks. Yeah, strong support at 1650. All right, so that's the story across the board on the markets. Let's take a look at gold futures. Gold futures are down, and that is going to be related to the US dollar rising. As I showed you the risk off chart, the US dollar is getting stronger. That's bringing gold back down after hitting its 50-day moving average right around 1740 or so, 1735. Further downside looks likely on gold. And again, keep your eye on gold, because if gold starts rising along with the US dollar rising, or the US dollar not dropping, going sideways, start looking for gold rising. That could be a confirming indicator, risk off indicator, that there's further downside in the stock market. Bonds down today, yields are up. When interest rates rise, yields rise and bonds drop, and that's happening as well. Again, we're going to be looking for risk off here. It's not happening at the moment. VIX futures /VX. Yeah, we're right at 32. All right, prior peaks up here, 35, as high as 36. If we do continue to correct, expect the VIX to rise. Keep an eye on the VIX. Sometimes it rises when the markets aren't dropping that much. So the VIX is a forward indicator. It also reveals the expense, the premium in the options, the at the money options of the S&P 500. It averages those out and gives a number. And the VIX also measures expected volatility in the market. So the VIX is high right now. This is perfect conditions for selling a credit spread. Oil. Let's take a look at oil. Oil's down a little bit today, but it had a really big day, a big week last week with all that's going on in OPEC. And this is why our Chevron trade's in a little heat. OPEC comes out, we're going to tighten supply, raise the price of oil consequently, and that drives oil up. So that's what's up there. And the thing about oil and OPEC is that news changes. Oil is a relatively volatile instrument because it has so many moving forces acting upon it, including recessionary fears, demand lessening because people ain't got no money, enough money to take their trips, to fly, to use their cars so much. Okay, so there's the general market overview. Now let's go take a look at Ford, because we're going to hop on Ford right in the beginning here. Okay, Ford. Let's find it here. UBS downgrades Ford Motor to sell, lowers price target to 10. When is Ford's earnings? When you're doing credit spreads, you got to know when the earnings is. So I'm going to go forward here. Earnings October 26. We've got 16 days before earnings on Ford. Why is that important? Well, if you have a trade that expires after October 26, you have a credit spread that expires after October 26, what's going to happen is the IV is going to rush into the trade, especially the last week before, and make the credit spread that you sold more expensive from an IV perspective. So you don't want IV rushing in, upsetting your credit spread. It's generally not a good idea to sell a credit spread when you're expecting the IV to rush. So this gives us 16 days, 2 weeks. So I'm considering looking at a 1 week credit spread on Ford, maybe a 2 week. We'll take a look and see how the risk graph looks. Let's take a quick look. The market is now open. Let's see what Ford has done. Look what Ford's done, everybody. Yes. Here's what I think. I don't think Ford's going to make it back up to 1250 anytime soon. Certainly not in a week. Maybe not 2 weeks. 2 weeks is getting close to earnings, so we'll have to take a look at the IV and see if it makes sense. But man, Ford's down at 1150 right now. I would want to, ideally, I'd like to sell at 1250. This is my line in the sand. Think of it this way. I want to put on a trade that makes money anywhere below 1250, which is resistance, 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 support, resistance, resistance, resistance. It's a key level. So I want to sell at 1250. Now, let me build this in Tom's tools. This will be as of Friday. And then I'm going to change it based on the new data. So we got 10-7 here. This is Friday's data. I'm going to go after what I just did. Searchers, single strategy, call credit spread. Ford is my symbol. I select short term, which are the default parameters. This scanner was built for short-term credits. And then I hit search. And if nothing comes up, it's because there was nothing on Friday. The slippage might have been a bit hot. So what I'll do instead is build it myself. Options, option chains. Don't get stuck. If the scanner doesn't give it to you, go build it yourself. I know what I want. I want to sell the 1250 call. Option chains. I know what I want. Let's try 7 and 14 days. All right, so I'm looking at 7 days, 14 days, probably 14 days, but we'll see what's available 7 days. I click update, and then I come down to my, let's get a few more strikes. Well, we'll start with 1 point strikes. That's fine. And then I may widen them. So let's see what we can get for a week. Now the prices are going to be different. I'm going to have to look at the live prices in Thinkorswim. So what I want to do here, these are the options that expire October 14. That's Friday. That's this Friday. And so I'm going to sell the 1250 call. I put a -1 there. There's the 1250. I buy the higher. That's what a credit spread, a bear call spread is, risk graph. So that's what it was on Friday. This is a 50-cent spread. On Friday, it was giving us 12 cents. All right. It's not going to be 12 cents right now, but let's see what it is exactly right now. So I go into trade in Thinkorswim. I'm going to show you this nifty thing here. So these are the, I've got these, the option chain created as vertical spreads. So I can see right here that if I were to sell the 1250, 1350 call spread, there's no money there. There's only 2 cents. All right. Well, what about if I went to the 21st of October? 5 cents. So there's not enough money there for us to really make it worth it. So if I got 5 cents for this credit spread for October the 21st, I can kind of rough it out here. Let me get the right expiration date. This is the real world. I wasn't sure what to expect. I knew we weren't going to get as much as we did on Friday.
October 28th, looks like about 13 cents, Mike, 12.
At 12, you're saying? Yeah. What? Say that again. Sorry.
12 and 12 and a half. October 28th is 13 cents.
Yeah, we'll go back. We'll get there in a minute. Let me just demonstrate where 1250 is. We may have to drop it a bit, and I'm happy to do that in this case. But just kind of finish the thread on the 1250. If I was to get 6 cents on that one, all right, that's 6 cents risk 54 cents. Let me show you what that looks like. So all I got to do here, just to show you what's available right now for next week, if you were to sell the 1250 13 call spread for 6 cents, this, don't worry about what's on the buy. This is a net credit of 6 cents. You can get an idea of, is it worth it? Well, here's the deal. 13.64% is available for us based on today's price with a probability of profit. And it's not 60% now because the stock's further, we have to wait. But that probability of profit is going to be immense, like 80, 90% probably, of making 13%, almost 14% in 14 days. That's the basic rule of thumb for me, with a minimum of 10%. If you can make 1 percentage point a day, 13.64, let's call that 14 over the next 14 days with astronomical, what was I going to say? Probability of profit. You know, you know, that's this game. How close do you want to get? How much probability do you want? And they're inversely correlated. If you want more ROI, as George is pointing out, we could drop the strikes further down. So for Friday, we could sell the 12.50 for 6 cents, and that would give you 13% between now and Friday on Ford, as long as it stays above 12. Is that going to happen? It might. I think quite likely that it will. Remember, it's a sell recommendation. Sell recommendation. Ford may recover a little bit. Earnings is coming up in what, on the 26th, so 16 days from now, earnings comes up. I'm thinking I'm liking that quick 13% profit between now and Friday. And there's no one right answer. It depends on what your appetite is. If you're interested in making 13% between now and Friday, provided the stock stays below 12 after being given the dreaded sell recommendation by a big analyst, a respected analyst, UBS, then you know, that's a good trade. If I wanted to go out further, let's go out to the 21st of October. There's 11 cents. So 11 cents. Let me just show you here. So 11 cents would give you Have I lost internet again? It just started raining.
Nope.
Okay, good.
You're good.
So Mike got a question.
Yeah, bud.
On the news, they often say that it's downgraded from 13 to 12 or 10 or 15 to 13. How do you take that into consideration?
Not really. Those price points don't really translate to much. Over time, over long term, that's their price target, but it doesn't really, it's not really respected by short-term traders as something to worry about. I don't sell credit spreads at those prices. The stock can sometimes be higher or lower than the prices. It's just what the analysts believe the stock will ultimately be worth over whatever given time frame they're looking at. So I pay attention to it, but I don't use it to inform my choices about strike prices. Okay, so we're going to go after Ford here. Let's figure out what we're going to do. All right, now Tom's Tools is acting up. That's having one of those days. There we got it. All right. Okay, so if you were to get 11 cents on a, this is a, all right, let me change the strikes here. We're dropping to 12. Let's make this 12 cents here, regardless of the strike of the expiration. So this is October 21st, selling at 12.50. And let me get the price again. 12.50, October 21st is 10. Let's call it 10 cents credit. If you did that, then you're going to make 25% on the trade between now and a week from Friday. This is a 14-day trade. The stock's down here currently. And now you're taking in 10 cents. Your risk is, here's how you figure out risk. You take the distance between the strikes, 50 cents. 10 cents of that is a credit. The balance is your risk. So if you take in 10 cents credit with 40 cents of risk, you're maximum ROI is 25% in 14 days, which is fantastic. So as I see it, the two trades that make sense for us to consider are these two. I'm going to make this one the Friday trade. Maybe we'll do both of them just for fun. The Friday trade, selling the 12, buying the 12.50 for Friday. I've got to look up the live prices because we don't have them yet in Tom's tools. Whoa, what? 8 cents? Oh, now we want to get this trade off this morning because the IV is elevated. It's like, you know, it's like a school of fish feeding. There's a lot of frenzy, a lot of IV. And this is a Friday trade. This is the one I want. Now, how about this? 19% between now and Friday on selling this 12.50 call spread for 8 cents. Yes, please. I'm gonna do, yeah,
Mike,
I gotta hurry. So make
Right.
quick. Yeah.
If you widen, I got at 21 at 12 and 14 call. If you widen the
Yeah, but what's your
buy.
what's your ROI by doing that? Yeah, you're
I'm
gonna
not doing it
get
on
more.
Tom's tools.
Yeah, yeah. So you can, let me just illustrate what you said. So I could do the 13 call. Let me edit this and do a 13 call up here. Yeah, you're going to get more credit if you're lifting the upper strike, you get more credit, but you get more risk too. And so although, yeah, you get more credit, let's do that here. 13. Yeah, there's 10 cents credit there. You went to 14. You can go to 16. You're going to get more credit. But the problem is that although you got a little bit more credit, your risk is now $2 per spread. So as you widen the spread, your ROI drops. So I'm going to go back to the 12.50. Let's just do 10 for now. I'm going to ask for 8 cents. So here's the Friday trade. I have it right here. If we get 8 cents, we're making 20%, 19% between now and Friday. If we did 10 of them, our max risk in the trade 420. Profit 80, 19% potential ROI between now and Friday. Now, I might have to go to 7. I'm happy to do that too. Confirm and send. Let's see. Forward slippage is quite tight. We're at 7 cents. Let's see what Ford's doing. Ford's, yes, it's hanging. It's not dropping much further. Yeah, I really like this trade. The question is, do we go after 1 cent and wait or just get filled? I'm going to get filled. You can now see the price is dropping. That's going to happen throughout the morning if Ford doesn't rise. So now we're down to 6 cents. So I missed it. So I was trying to get it on fast because I knew that the prices will fluctuate. So at 7 cents, we can get 7. We'll take it. Confirm and send. Got it. Okay, got filled for 7 cents. Thank you very much. 13 cents, 6 cents. Okay, 13 cents, 6 cents. This is filled for 10 contracts. I will save this. And this is a true sniper. 16% on this trade, provided that the stock stays below 12 between now and Friday. Now, anything can happen, but we got probability on our side. We've got a market that's under a lot of pressure. We've got Ford that was downgraded to a sell recommendation, which is considered the kiss of death. What? It's considered the kiss of death.
Yes.
Yes, it is.
I have an address for him.
Let's mute Andrew there, buddy. All right. So there's our trade. How do we manage it now? Immediately, when you're doing these short termers, it doesn't make sense to try to, I mean, you could try to buy this back for a penny, which is just above 10%. 10% would be 0.7 cents. So you could try to do that. On these trades, I'll often just let them expire. By the time this thing's worth 1 cent, the stock's probably going to be down a lot, but let's go ahead and practice safe trading. And now what I'll do is take the fill order here and I right click it and I create opposite order. And this is going to be a GTC to buy the spread back for a penny. The instant it's worth a penny, which could happen fast, and then you'll be out. Confirm and see. So all I've done here is look here. We're going to be buying back the 12 call that we sold, selling the 12.50 that we bought. We want to do all of that for 1 cent debit. Good till cancel. Confirm and send. Send. That's practicing safe trading. All right. So there's Ford. Let me hop into the website. Thanks to Felicia for having us look at this, because I think this is a lot better way for us to track trades. So I'll go into, if I can remember my website name, MW Trade Coach. I get up at 5:30 on these days, and it takes a little time for my brain to get rolling here. I think it's rolling, but okay. So we'll go into the community here. Gerardo and I are going to talk about putting up separate boards. Went to the wrong one here. There we go. I'm going to go into snipers and I'm going to create a new topic. And this new topic is going to be Ford bear call spread, a very strict sniper trade. And this is going to be a trade idea. Snipers trade ideas. And what I'll do now is simply just copy the imagery. This is it here. This is filled. Forward, that's the actual legs. Paste. Let's get the risk graph. The risk graph, I don't know, the risk graph's not valid yet. Not until 12 minutes. Ford is down here. I got the wrong price here. That's 7. Somehow I lost my prices. So we got 7. Oh, let me just put the prices in. 13 and 6 cents. All right, we sold for 13, bought for 6. That's a good practice to do that. 13 and 6. And
The strikes are different.
I got the wrong trade here. I do have it
Oh, there
correct.
you
I'm
go.
just copying the wrong one here. Did I put the right one in?
No.
Let's see. I didn't. I think I did, but I'll do it again to be sure. Let me get rid of that one. This is the one I want. That's filled. Slippage is look at the slippage. It's very tight. Pennies wide. So I'm not going to put the risk graph in just yet because it's not accurate until 10 Eastern. So there you go. Place GTC to buy back for a penny. And then stop loss is a close greater than the break even, which in our case, just to write it down, is 1207. 1207. Rules, detach, react, detach, react, detach, react. Let the rules do the trading for you and stay the heck out of the way. Keep your human opinions to yourself. Your fears, your hopes, your desires, throw them out. Follow the rules, detach, go on to the next one. All right, what's the next one? Well, let's take a look at this bad boy. AMD. My dog's about to knock down my light. AMD. Yes. Yes, please. AMD, a chip stock under extreme pressure. They came out last Friday and said, our earnings are going to suck. We're in trouble. We're losing business. Stock tanks. This is not quite a volume spike day, but look, a big down day. This would have been a good day to do the trade as well. I would have sold right here at 64, 65 or 70. Now I'm looking at it with all the news going on with China. I like 65. The stock's at 57. What can we get for that? Well, let's go looking. A couple of ideas. No, let's see what we got here. I got to remember what we have in terms of our portfolio. Let's see what we got already. I know we have Texas Instruments. I don't want to triple up on tech stocks or chip stocks. It's really important that you don't just do like 5 chip stocks. So we got Chevron, Ford now, financials. There's tech. We got Texas Instruments as well, and Qualcomm, which is we're already in Qualcomm. Qualcomm is almost at a profit now, or an exit point. Let's just see where Qualcomm's at. So anyway, I'm just trying to see if I want to do some more, and I do. Qualcomm's down to 117. Let's see. Let's just quickly see what. For some reason, I don't have my GTC in. It's not in there. Qualcomm. This is the 155, 165 call spread for November 18. If I can buy that back for 13 cents, then that's an exit. So let's just. So I don't. Here's what I'll do. I'm going to go ahead and put the order in right now. Where is it? MNOP. Okay, I don't have it in my. Oh, it's already come off then. That's what happened. It must have already come off. But let's just check. If you're not, is anybody trading this? Anybody trading this? November 18. If you are trading it with a GTC, you should be out. So this was actually exited already.
Yeah, Mike, I traded it and I was out on Friday.
Yeah, so I missed the, so it exited on Friday. If you happen to have Thinkorswim and you want to see prior fills, you got today right here. I know everybody doesn't have Thinkorswim, but your broker will have a place to go, in this case, account statement, and you can go look by stock time frame to see. I don't even have it there. All right, I'm puzzled why it's not in my system. But anyway, this one should be exited at the moment. This is the 165, 155 call spread. And if I go back into the tools here, I go to November 18 and I find the 155, 165. I'm not going to see it here. I will buy that back, change the upper strike to 165. And it's showing currently 17 cents. So it's within a few cents. If you've had the GTC orders in, you will be out of this trade by Friday, according to Jay David. So anyway, the point is this one's in good shape. It'll come off in the next day or so if you're not out already. So with all that, I'm gonna feel more free to go after AMD. So let's go looking. Searchers, single strategy. And let's just see if there's one that comes out of the scanner for AMD. And we can do long-term as well. We could do a long-term and a short-term, in fact. Let's just check long-term. Okay, 25 days to earnings, 77% selling at 70. Let's look at his stock chart really quickly. 70. Oh, I've got short-term here. That's why. Sorry. I forgot to hit the long term. No, I did. What's going on? 10-7. Selling this 70 call on AMD. 70 is far too close for a long term. No point in doing a long term on this one. So let's do a short term. Let's snipe this bad boy. None there. All right, we're going to go build it. Let's just build it from scratch. I'm not going to let the scanners stop us. Back to AMD. And where do we want to sell? Let's zoom in a little bit. I'd like to sell at 65. I think that's going to be too far away, but we can see trade. Let's look for Friday at 65. Okay, only 3 cents at 65 by Friday. What about next week? 21st, 10 cents. So there's 11% on this trade if we sell at 65. 11% over 14 days, not very exciting. We may have to get closer. The unfortunate thing is, well, you know, unfortunate for them and for us, the stock came down so hard. I just don't want to sell at 60 here. 65 is my number. That's where I feel safe to sell. I don't feel good about 60. So the game of this sniper game is to decide how close you want to get to the heat. You could go to 60. There is a breach of the Friday's low today. Let's just check news real quick here. Look at Nvidia as well here. Cohen lowers advanced micro devices target to 100 from 120. So Johnny, this is that same question you asked earlier. That is bad news, but it's still maintained an outperform rating. So it's a downgrade in essence, but they maintained the longer term outlook to outperform. So that's mixed news. If I saw like Ford, price target lowered, sell recommendation, that's both, you know, that's a solid downgrade. So it looks like we're not going to be able to do much on this one, at least not at a level where I'd be comfortable. 60, you'd have to sell at 60 to make it worth it, maybe 63.
You can sell at 64 and get 9% for 7 days.
Yeah, let's check that out.
I thought the 64 and the 66 I put in there.
Okay. So we can see here, one of the great things about lining up Thinkorswim with vertical, so you change the option table to vertical spreads, it gives you consecutive strikes. And you can kind of get a feel here. This is a Friday trade. How close do you have to get to make it worth it? So 64, 65 for Friday is 1 point lower. That's 6 cents. All right. So if you're getting 6 cents for a $1 spread, your risk is 94. And so you can kind of rough that out. That's about 5%. Yeah, that's not worth it. You could drop it down to, here's some 50-cent strikes. If you dropped it down to 63, 50, 64, you're going to get 4 cents and your risk 56 cents. Yeah, that's not even 10%. That's my minimum on these things. So if you sold at 60 though, you get 26 cents. Risk would be on a dollar spread, 60, 61. Your risk would be 74 cents. That's a 25% profit if you step up to the heat and go all the way to 60. So I tell you, it's you can lose money on these things. And you'll lose more often on these than the longer term credit spreads. And so the game here is to not have that happen. And unfortunately, I don't see 65 as a no-brainer. I would love to sell at 65, but the stock's already down to 56.78. So it's a little bit far away. All right. So we're going to pass on AMD. I had some other stocks I was looking at this morning. Ford was a sell recommendation. We got that one. And then GM was also downgraded. Let's take a look. Oh, yeah. Maybe GM. GM downgraded to neutral from buy by UBS. So Ford got the double hammer. This one, neutral, not a sell, but a neutral. So it got spanked, but not as much as Ford. I'm not going to put two credit spreads on the same on two stocks in the same industry. So we're going to pass on GM. But same thing. If you didn't get into Ford, then you might want a paper trade. Follow the same system. 34 right here is resistance, support, support, resistance. So 34 would be a good place to sell here as well. So let's leave that one. Let's look for some other downgrades. Here's some ambulance chasing that I like to do. Oops, let me try that again. Lovers and losers, analyst downgrades, and I can sort by the ones that have dropped the most or moved the most. Let me try that again. Let's get the bigger losses on the top here. Okay.
Mike, did you also say you wanted to look at Nvidia?
Nvidia, yeah, I did. Yeah, thank you. I'll come back to that one. Nvidia. Chip sector. Yeah, another good one. 120 would be reasonable on this one. 125. Let's see. Nvidia shares are trading lower by 3.27. Are trading lower, continued downward momentum, sympathy with advanced micro devices after the company last week lowered its third. Okay, I didn't know that about Nvidia. I missed that one. So Nvidia also lowered its guidance, and the stock is actually now below 120, and it's 1 minute past 10 o'clock Eastern. So now what I can do is update my date here in Tom's Tools, 10:01 Eastern, and then I can type in Nvidia. And let's go after a short-term credit spread on Nvidia. And the software will give us probabilities now. Okay. Here's a Friday trade. Selling at 121, offering 61%. Why did I go? Well, I don't want 61%. I want higher probability of profit. So I can do that by taking the trade that comes right out of the hopper. Yeah, that's a little close. I mean, we could get something happens with China and Biden says, oh, we're gonna soften that stance, and then the market rises. Anything like that is possible. So what I want to do is lift this up, and not because we have a potential ROI of 61%, we're going to lift this strike up from 121 to higher and take less credit in exchange for more probability of profit. Okay, so where do we take it to? That's the next question. Let me go into Tom's charts here, since not everybody has Thinkorswim. So if I go into stocks charts, stock charts, Nvidia. I would love to sell at 130, please. Now see, support, resistance, and volume is still in play. We had a big drop on Friday on the same news that AMD came out with. The stock has set a lower low. This is tracking with AMD. The stock isn't as far down as AMD is. It didn't drop as much. It's now breached strong 120 support with this extra volume, good chance of a move to 110. So I'm looking at two places to sell. I'd love to sell at 130. Let's look at the IV as well. So I'm going to overlay the 7 to 30 day IV. Yum. Guess where this IV is going to be at Friday at 4 o'clock? 0. Implicit IV crush by Friday. Options are extremely expensive, extraordinarily expensive. They were about there on Friday, and now even more. All right, so it's Chicken Little for Nvidia. Time to come in and snipe. I want to look at 130. So I'll go into my risk graph, duplicate, and let's see what we can get. Edit. Lift up the lower strike. It's not going to be enough, I don't think, but we can look. If not, we'll go to 125, 130, 131. If you don't know what the strikes are, you can scroll down here. And why would you know what the strikes are? And this Nvidia's got 1 point strikes. So we can sell 130, 131. All right, let's see what it looks like. I don't know what it's going to look like. I don't know if it's going to be enough credit, but we'll find out. Yes, indeed. 11% by Friday with a probability of profit of 90.3%. That's statistical.
It gives you 7 cents right now.
7 cents right now? Okay. Let's see what that looks like. Oops. Wouldn't be nice if we got 70 cents. No, we're going to get 7 cents, maybe. 7% by Friday, 8% by Friday. Probability of profit 90.2%. If we got 8, what would it look like? Let's set our price. All right, 8% by Friday. The other option would be to go out and get more time. Edit. Let's go to October 21st. Risk graph. Mm, 78 cents. 22% by Friday, provided we can get those prices. So let me just hop in here and let's check our prices. These are the live prices. These prices will probably fluctuate today. So the first trade we want to look at is the one that expires Friday, the 14th of October. And let's see what we can get for the 130, 131 call spread. I can see right here, 130, 131, 7 cents. We might be able to get 8 on this. If I went to 129 though, which is 1 strike lower, I could probably get 8 or 9 cents. The slippage is so tight on these. So as you go lower, you get more credit. And so the game again is how close do you want to get? So if I go after this 7 cent trade here, once again, at 7 cents, that is not that high of a return. So given that it's pennies wide, we could set it for 8 and see if we get it. That's 7, you know, that's still 2% a day between now and Friday with a massive probability of profit. This is sniping, everybody. Now it's down to 6. So things are cooling off. That's what happens. You want to, when you do these snipers, you want to do them in the morning, the first 15 minutes. If you're ready, you can grab these before the IV starts cooling off. The IV is going to be spiked in the morning, and then it starts to cool off later in the day. So now it's down to 6 cents. That's becoming less and less interesting. 8 cents isn't going to happen, at least with the current prices. If AMD comes back up a little bit, we could get a little pop. So with all of that, I think what we ought to do then is go out another month. I want to stay at 130 because I want probability. So 15 cents if we sell out on October 21st. I hope this is useful. I know I'm trading out loud. All right, what was it? 15 cents. That generates 17% in 11 days. I think that's a good trade. I'm going to do that one. Earnings is in 37 days, so we're set. This is the one I'm going to go after. 15 cents credit, 17% between now and a week from Friday on the 21st of October, 11-day trade. Of course, if you have different ideas, go for it. How many do I want to do? I'm going to do 5 to keep my risk under 500 bucks. 5 times 85 will be our max risk. $425 of max risk, bringing in $75. It's a nice trade. Nice, nice, nice. Let's see if we can get our 15 cents. Drop the contracts to 5. Not 150. That's at 13 cents now. Let's try for 14. That's fine too. Confirm and send, send. Things are, you got it. We got it for what? Okay. Thinkorswim just gave it, the simulated platform just gave it to me for 19 cents. I don't know that's fillable in a live market. So I'm going to put that caveat on this trade. But if you can get 15, 14 cents, go for it.
Mike, I got 15 cents.
You got 15? I'll track it at 15 then.
I got 15 too.
You all got, okay, good. Let's save it. And then this is a fill. Now that we're filled at 15 cents, I'll put an order in to buy it back for 2. All right. So Nvidia is filled. Here's my filled orders. create opposite. So let me just tell you what I'm doing. So you can also go down to your position statement and generate the closing order, but it's much faster just to say, all right, I just got filled on that. Right click it, create opposite order, make it a good till cancel. And let's buy this back for 2 cents. I know a lot of you are going to let it expire. That's fine. But try to practice safe trading. All right. So there we go. There's another one. This one looks real nice. Let me give it a name here so I can remember. This is a short-term credit. Short-term bear call. And let's put another trade on the board. I think that's where I'm going to stop for this morning. I've got a full day. I mean, I often do this for hours. It's fun. It's called Sniper for the reason that you're discovering new topic. And this is a Nvidia short-term bear call. Let's copy the imagery. That's it. Here's the proper risk graph. And I'm going to take you to the Ford risk graph here in just a sec and show you where Ford's at, since we now have the live pricing. And this is going to be GTC profit stop buyback for 2 cents, stop loss close greater than break even, which in our case here is this number 130.15. That's our break even. That's resistance, by the way. So we got layers of protection. 130.15. And there's another trade for today. Snipers, 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 snipers. One quick thing on Nvidia. You can lower it to get more credit. But now that we've sold at 130, which is this level right here, for us to get into trouble, Nvidia is going to have to break back up above 120 resistance, and then above this level here, which is 125, 125, 125, 125, 125. That's also a resistance level, and then we have 130. So we have 3 resistance levels as protection, and we have a world socioeconomic news that would suggest Nvidia is not going to do that between now and October the 21st. Okay, let's check chat. Oh, I wanted to show you Ford. I'm going to run my portfolio report now, and you're going to see all those trades in there. Let's go to the latest date here. Calculate. Okay, Ford's breaking even, but let's look at it. What's the probability of profit now that the stock has come down? It's 85%. Statistical probability of profit on Ford. 16.28% max ROI. And here's your risk graph. Is Ford going to be back up here by Friday? I don't think so. I don't think so. Advanced traders, you may want to start seeing if Ford starts to hang out and go sideways. It's got strong support here. It's got strong support at about 11. You could come in if you want to jump in front of the train a bit. If Ford starts heading sideways, then you could sell a put spread underneath and turn this into an iron condor. I wouldn't do it today. Would not do it today. The signal would be Ford bounces off this level here, or tomorrow there's an inside day. What does that mean? Let me show you. You find a stock chart here on Ford. Let's zoom in a little bit so I can illustrate this point. Let's go 10 days. Okay, so Ford just got its sell recommendation. That's not a good chart. I wanted to make that bigger. Let's do it on the Thinkorswim. I can do that a little easier. Nvidia's dropping further since we got in. Ford, zoom in. So what I mean is that here's, here's this big body here. I don't know where Ford's going to end up, but if Ford trades tomorrow within the body of today, then that is a sign that perhaps the stock may go sideways from here. Okay. So if that happens, you can feel free to put a post on the board itself. If you have other ideas about how to handle Ford or Nvidia, you've got the, let me go ahead and I'm also going to post the new risk graph on Ford so everybody can see it. But anyway, what I was saying was, feel free to post ideas about maybe turning it into an iron condor, if that's something that you want to play with. Is this the one? I've lost it already. That's over here. That's right. Okay, so that's the new risk graph on Ford. The proper today risk graph on Ford is this. Hedge fund traders, broken wing butterflies on these. Look for broken wing butterflies. They're going to be pretty awesome. Let's reply here, post the image. So much easier to post images on this platform. Reply. There you go. There's Ford, Nvidia for today. Just to leave you with some stuff to play with, I just did a quick analyst downgrade scan within Thinkorswim, and I'll share with you some of the stocks that have come up. So this is, let me just make sure it's got options trade. Yeah, it does have options. Oh, forget it. The slippage on this is just sick. Not all of these are going to have options. That's what I'm looking at. I'm just looking at slippage here on Axonics modulation technology. Slippage is gargantuan. So you want to be careful. Sometimes I just look at slippage here. This one's a little wide as well. TPB, Turning Point Brands, nasty slippage. How about Lowe's though? Lowe's is good. What was Lowe's news? Yeah, so Lowe's got downgraded to a hold from buy by R5 Capital. Yeah, so that happened just today. So that was downgraded. So Lowe's was downgraded to a hold from buy. So if you look at the stock chart on Lowe's, you can just maybe go after these on your own. I don't see Armageddon here. Okay. Nothing like Nvidia or AMD. So I don't do that one. Here's Bristol. Here's Procter and Gamble. Oh, what? Really? Procter and Gamble? Goldman Sachs downgrades Procter and Gamble to neutral from. There's a lot of downgrades to neutral. Goldman Sachs, Deutsche Bank. That's a price downgrade. And all of that happened today. Okay. So Procter and Gamble is an interesting one as well. Bristol Myers, I saw that one this morning. You know, what's interesting about this one is we have this thing called a death cross, where the 50 crosses below the 200. I'd like to sell up here at 72, please. The stock's at 60, 69-ish, just below 69. Again, you're looking for your line in the sand. If I could sell at 72 and get some credit, the only way I get in trouble is if the stock busts up above 70 resistance, support. Now resistance and 71, and the 50 and the 200, and then we get to 72. What's that? 5 or 6 levels of resistance. The news was downgraded from buy to neutral. There's a lot of these on the board for today, and there's quite a few more down here. I'll tell you what I'll do is let me copy this list here and put it on the boards So if you don't have Thinkorswim and you don't have access to this, these are the biggest downgrades at the moment. So I'll post that on the boards here under snipers, and new topic, today's downgrades. And today is October 10th. Okay. That is what I have for today. All right, questions, comments, any stocks you're looking at? I'd also go after long-term bear call spreads. I got to do that now, real quick. Perfect time to just run a general scan. What's out there? Searchers, single strategies, call credit spreads, long-term. You could even go after just the semis. I built this list a few weeks ago. Chip stocks, AMD, Nvidia, Qualcomm, SMH, which is the ETF that tracks semiconductor stocks, long-term out of the money bear calls. And there's some big ones here. Anything above 80%, statistically speaking, is good. Notice Qualcomm. That one comes off today. You could do another Qualcomm. Why not? We're gonna get out of Qualcomm today or tomorrow. If you're not out already, do another Qualcomm. You know, again, set your strikes where you think the stock's not going to get back to. So there's plenty of opportunities there in long term. And then, of course, if you want to look for short term, you can do that as well. How do you find chip stocks? Well, let me give them to you. You just, here's how you do it. SMH ETF holdings. And you'll find that the list of stocks in that ETF are numerous places you can find them. So you can just do that. ETF DBs has it, Yahoo Finance has it. There's many sites that will give you the holdings. Or to make it really easy on you, what I could do is show you the trades and post them. So I've already got the list. I've created it. I go to chip stocks. Where are they? There they are. And I'm going to copy these here. Oops. Oh, I just lost them. Oh, no. I'm not going to save. Okay, I'll try it again. What did I just do? I don't know what I just did. Lists, edit list, chip stocks. There they are. Control A, Control C, do a new post. Snipers, new topic, chip stocks. Short-term, long-term bear calls, credit spreads. There you go. Body seems unclear. Is this a complete sentence? Oh my gosh. Chip stock list. And what you want to do is copy these into a TTR list called whatever you want to call it, chip stocks. Or whatever you want to call it. It doesn't matter what you call it, as long as you remember. Create. All right. All right, welcome to Snipers. This is exactly what sniping is. Credit spreads. Again, earnings this afternoon. We're going to be digging hard into breakout straddles. We've got my presumption last week was confirmed by some of the top analysts. They're expecting volatility earnings season, and it's a perfect time to capture gaps, as well as the optimal red waves to capture IV rush into earnings with this expectation in the air. So it's going to be a good month. We're off to a good start already. Let's see if there's any last minute questions or comments, checking the chat box. Okay, some of you got filled. Okay, great. All right, everybody. That is a wrap for today. Have an awesome day. Pura vida. Hasta luego. Te amo mucho.
Thanks, everyone. Thank you.
Thanks, guys and girls.
See you at noon.